you said that there were two big players in the region, and with all due respect, it depends on how you define big. With all due respect to the two other exchanges or the other exchanges in the Middle East, they all felt underwhelming from a product ambition standpoint. Some of those exchanges has distributed dividends, which means that they think that $1 outside the company is worth more than $1 inside the company. And that showed me that it was a weak mentality that we could easily crush.
Hi everyone, welcome to another episode of the Postmoney Show. Today we've got Talal Tabbaa with us, who's the CEO of CoinMENA, a Middle East-based cryptocurrency exchange. Thank you so much, Talal, for taking the time to do this. It's a pleasure to have you here.
Oh, likewise. Pleasure to be on the show. Huge fan.
Thank you. Let's start with the general question, the introduction. Would love to understand who Talal is. What is CoinMENA? How did it happen? How did you get into building CoinMENA?
All right. So first of all, CoinMENA wasn't my idea. So even though I'm one of the founders, it wasn't my idea. It was my partner Yazan's idea. And I would say that my partner Dina has been building it the most. And I'm obviously part of the founding team. But it's building CoinMENA is a collective team effort. And a regulated business takes a lot more effort and a lot more heads and a lot more eyes thinking about it than a normal tech startup. But answering your question on who's Talal and what's CoinMENA and how did we get here. So CoinMENA, we're the fastest growing crypto business in the Middle East, also happen to be a regulated exchange by the Central Bank of Bahrain and the Virtual Asset Regulatory Authority in Dubai. So in a nutshell, CoinMENA allows users to go in and out of crypto. And what do I mean in and out of crypto? Today, you have money, you're paid by your company. Most people are paid using a SWIFT transfer to their bank. Some people are paid in cash, some people are paid in different ways. Anyway, there has to be a way where you can deposit those hard-earned dirhams into a regulated exchange such as CoinMENA in order to buy Bitcoin, USDT, Ethereum, and others. And then if you get paid in USDT or if you own Bitcoin, you need a reliable way to move them into your bank account, because until now you still pay your rent in dirhams, you still buy your milk and whatever using your bank-linked card, etc. So CoinMENA allows you to efficiently and compliantly move between crypto and your bank and bank to your crypto. So from the bridge between, let's say, the traditional financial world and the crypto financial world. And in terms of Talal, I'm a Jordanian engineer that likes to solve problems using new technology that no one properly understands. And I guess that's something that early on in my career, I hated a lot about traditional finance, because you'd speak to a banker and they'd be working in banking for 30 years. And it's like, yeah, we know how this is solved. So I wanted to work in an industry where everyone is kind of a level playing field and no one is an expert. And I find that to be a lot more exciting than working in a traditional space. But I was born and raised in Jordan, studied engineering in the US, worked in consulting a little bit. We did consulting for banks, etc. And I realized they were absolutely clueless when it came to technology. I also realized that banks aren't going to be the ones to implement new technology to improve the world of finance, because they are currently benefiting a lot from that inefficiency. So I guess those factors together led me to crypto. And in the world of crypto in the Middle East, there weren't very reliable options for you to move between your bank and crypto to your bank. So we decided to set up CoinMENA as a regulated exchange, and we proved the thesis right, because we've been able to grow our market share quite significantly, even though there's other more underwhelming players in the market.
You said something very interesting in the introduction, and you've sort of repeated it as well, that CoinMENA essentially enables anyone to move their money between bank and crypto, and apparently it is a very safe channel to do that. But is it an affordable channel to do that? Because all the cryptocurrency exchanges, despite of claiming that, crypto is cheaper than traditional finance, I rarely see that as the case, because when I go to, the frequently asked questions page or pricing page of even the cryptocurrency exchanges in the Middle East, and I remember, looking at CoinMENA's page when I think one of your first rounds was announced, and I was sort of disappointed by the pricing, because if I remember correctly, it seemed like very expensive for at least, transactions below, let's say, $500 or $300. I don't remember the exact figures, but it seemed expensive, at least, when the first funding round was announced.
Love the loaded question, and I will unpack that in different ways. First of all, we are a profit-oriented business. So we are not going to charge low fees, because if you pay peanuts, you get monkeys. There was an exchange in Turkey. No, really. If there was an exchange in Turkey that offered 0% trading fees, the founders took the money and left with. Yeah, exactly.
Yeah.
So at CoinMENA, we're not a cheap exchange, because you're getting the best insurance, you're getting the best service, and you're getting a fully regulated entity. Having said that, in my opinion, there is nothing more expensive than your hard-earned earnings being debased by holding them in dollars or other fiat-denominated currency. So the most impactful thing from a purchasing power loss is having your wealth denominated in dollars and seeing it dwindle in terms of purchasing power over time. We charge 0.75% on CoinMENA, so just less than 1%.
This is for deposits, or this is for doing the trading?
I will give you the full flow at the moment. How can you deposit into CoinMENA? You can deposit via crypto or wire, and those are completely free. Or you can deposit via card, and we charge 3.5% on card deposits. Card deposits, in my opinion, are not a very efficient way to buy crypto, because you're going through multiple intermediaries. People prefer it for convenience, but we always suggest people to wire in locally in dirhams or locally in Bahraini dinars as well. So 3 methods to deposit. 2 are free, 1 is charged. So I will give you the happy route of Zubair depositing in dirhams and then buying USDT and withdrawing it. So you deposit dirhams for free. You buy USDT for 0.75%. So you pay 0.75%. And then you can withdraw your USDT for as little as $1 per withdrawal, because the cost of withdrawing USDT differs based on the blockchain. So for example, the Ethereum blockchain is considered very safe, but it's also very expensive. The Tron blockchain is considered very centralized, so it's not super secure, but it's very cheap and fast. So I will give you use cases of how people use crypto today in ways that are far more efficient than traditional banking. We have companies that currently process payroll using CoinMENA. They have employees all over the world, 600 gig employees or designers or whatever, and you want to pay them each $70, $80, $200 per month. So if you were going to deposit it via bank transfer, good luck, because you're going to get charged $35 on every withdrawal. Whereas if you're withdrawing on the Tron blockchain via CoinMENA, you're paying only $1 per withdrawal, and the cost of converting from dirhams to USDT is 0.75%, which is similar to the spread that you would pay at some of the banks in the region. Is crypto the most, let's say, the cheapest way to transact? That's not yet for all use cases, but for some use cases, yes, it is. The other one is cross-border transfers. If you want to buy something from China, from Shenzhen, China, and you want to send dollars to Shenzhen, China, the time that is needed to settle those funds and clear them can take up to 1 week, 2 weeks. We've seen instances where customers are buying USDT and sending it abroad to purchase lumber, other commodities, normal trade, because it's much faster in terms of settlement. Is crypto the cheapest way to transact? The cheapest way to transact today is still physical cash. The Hawala system is still by far the cheapest way to transact, which is why many people in the region still use it. However, I do think that crypto poses or provides a better, more reliable and cheaper alternative to transact. And as the industry matures, those margins will slowly but surely get squeezed over time. But again, in terms of, I would rather disappoint you on CoinMENA's fees rather than disappoint you by a company going bankrupt, because as CoinMENA, we're a cash flow positive, profitable business. And we do that because we manage we custody other people's money. We're a custodial business. So I think custodial businesses cannot follow the venture route of just raise money, burn it, and inshallah we will raise again. No, you have to have a cash flow profitable business, because if you're not managing a cash flow profitable business, then you're putting your clients at risk.
Right. So a quick follow-up here. You mentioned that you are processing payroll for some of the employers who want to pay their remote workers across different parts of the world. And the argument you make here is that it is actually cheaper to transact in USDT through a platform like CoinMENA when you're doing these transactions, because you're not going to be charged, let's say, the $35 flat fee on cross-border transactions. Let's say if I am earning in USDT and I live in Pakistan and the money lands in Binance or wherever through a USDT transfer. I'm just trying to assume that it lands in Binance or in a third party crypto wallet. Sorry, in an independent crypto wallet. If you want to use the money you have earned in crypto, you have to transfer it to your bank account to be able to use it. You cannot go and use the money that you want. I mean, please correct me if I'm wrong. I mean, we haven't seen crypto-linked cards in the Middle East, at least yet, as far as I know.
Yeah, so this is like an assist in the world of basketball. That would have been a clear assist, because that helps me shamelessly promote our product without feeling bad about it. So CoinMENA, we've partnered with Visa to allow people to spend their crypto anywhere in the world. So this will be live hopefully in the coming couple of months by Q2, where customers can, if you go to card.coinmena.com, you will see the wait list. We have huge amount of demand for it, and we will be launching it for our, let's say, top customers to begin with and iterate and improve. But essentially, you will be able to spend your crypto balance anywhere in the world. So that removes the part or the issue of me not being able to spend my crypto or needing to move it to my bank instead. But I would go a step beyond that and say that if I'm in Pakistan and I'm receiving USDT, I'm actually at an advantage. I don't know what the rate for USDT versus local currency is in Pakistan, but I'd be willing to bet that it's slightly better than the traditional banking rate. Why?
It is.
Because yeah, of course. And I will explain to you why. It's a very simple supply and demand reason. Countries like Pakistan, Egypt, Lebanon, Jordan, there's a shortage of dollars. And even the dollars that are inside the country, you have huge restrictions on sending them abroad.
Right.
If you have USDT, you can sell it on the local market at a premium. You can send it to other people that have USDT, and there's about 420 million crypto wallets at the moment. So if you want to say like 4% of the world today has crypto wallets, that's not a very bad percentage if you ask me. People are slow to change. But the best way to change people is economic incentives. If you go to Egypt, if you go to Iraq, Pakistan, etc., there is a growing USDT market, and that is because people are like, I would argue that USDT has banked more people in terms of banking the unbanked rather than all of the banks' efforts combined. Because banks, when they say we want to bank the unbanked, they're lying. They don't care to bank the unbanked. They care to bring in big deposits so that they're able to make money on those deposits. And banking the unbanked is probably the last thing on their agenda, because the cost of compliance for low value customers doesn't make sense, which is why we have people with so many like banking issues. So USDT is like no marketing BS or whatever. They're actually banking the unbanked.
For an average person, please explain to them that why a stable coin is generally a safe bet, because there have been instances perhaps earlier this year or maybe towards the end of last year when there were issues with Binance and their stable coin went through some trouble. It basically lost its value, a part of its value for a brief period of time, and then it got back to that. But why an average person should be should make this decision to potentially keep a part of their savings or money in USDT? Why is it a safe option?
Okay, so safety is a very relative concept. If I'm living in Lebanon, USDT is the safest financial instrument in the country. If I'm living in Washington, D.C., then I have 1,000,001 options to keep my dollars in a safer way. But if I'm in Lebanon, USDT is the safest financial instrument. Why?
Right.
Because the credit worthiness of banks. Because okay, let's think of it from a credit worthiness standpoint. USDT has multiple levels of risks. Like first thing I want to acknowledge, Zubair, is I'm not saying that crypto is the ultimate savior and it is no risk. Crypto is a very high risk industry, which is why the returns are so high, which is why the upside is so high. So anyone that tells you that they are low risk is not being honest, in my opinion. Whether it's USDT, whether it's all of the crypto industry, it's super promising, but it's also high risk. So I have to keep that disclaimer out there because some people, I'm also guilty sometimes of drinking the Kool-Aid way too much of crypto, but I think it's important to show a balanced view. As for your question on Binance, Binance has not been the beacon of compliance, if I want to put it lightly, but no funds were lost when their stablecoin faced issues. So their stablecoin, BUSD, Binance USD, faced issues in the SEC where they had to bring it down. They had to wind down that stablecoin, but they winded it down in a very professional manner where none of their customers lost money. We have seen other instances where stablecoins got completely screwed, but similar to how you put your money in a bank, you want to understand what's the credit risk. What's the credit risk behind that? So I'll show you USDT and USDC. USDC is a stablecoin issued by Circle. Circle is a US regulated entity that is owned by Coinbase, Goldman Sachs, and other top players. They keep their dollars in banks in the US, such as Silicon Valley Bank, which failed, and many others. So when you're buying USDC, you're taking the credit risk of the issuer, which is Circle, as well as the banks that are custodying the funds. If you keep your money in Blom Bank in Lebanon, then you're taking the credit risk of Blom Bank. If you ask me, I'll take USDT over Blom Bank any day. Why? Because people in USDT can actually move their money around, where if you're using Blom Bank, you would have had some restriction saying you can only move X amount per week, or some other man-made restriction that makes absolutely no sense except to enrich the rich people of that country. So yeah, when you say risk and safety, it is all very relative. If you have a private banking account in Switzerland, then maybe you don't feel you need to use USDT. But yeah, it's more of an emerging market phenomena because of the lack of availability.
Right. I mean, that explains it. Thank you so much for sharing the detailed response. We'll come back to crypto, but let's talk a bit more on CoinMENA as a company. I'd like to understand, you were obviously, one of the founding members, and you helped build it and scale it to where it is today as the CEO of the company. What does an MVP of a product like this look like? I mean, if I want to start, for example, an e-commerce store or a marketplace or something else, I can very easily build an MVP and try to validate the idea. How does one go about doing that in something like this, where there are a lot of pieces involved, regulations are involved? What did you guys do? For the MVP?
Yeah, so I think you have to break up the MVP into multiple angles. You have your regulatory MVP, you have your demand side MVP, and basically compliance and licensing. So to be completely honest, we did not really need to build an MVP for CoinMENA because we already had the flow. Like, this was more of a pull thing rather than a push. So
right.
Prior to CoinMENA, I have built many crypto products. All have failed because there was no demand for them. I was building Ethereum decentralized applications, stuff that was, in my opinion, very exciting, but there was like maybe 80 people willing to part with their hard-earned money in order to use them. So my partner Yazan was like, listen, crypto exchange in the Middle East is a very lucrative business, etc. And my partner Dina used to manage operations at BitOasis at the time. And I used to be a very angry customer of theirs, and used to tell Dina, inshallah, one day you will leave and we'll start an exchange together. Anyway, that ended up happening. And back to your question on MVP. So we built the initial MVP initially we just created the wireframes. We had a very embarrassing first website. I remember we did it with some like random vendor. And it was just like your ability to it wasn't even connected properly from a back-end standpoint. It was just like more of a clickable demo to show the regulators what the experience would look like. But from the year of 2018 to 2020, like from 2018 to 2020, my phone was one of the most active OTC desks in the Middle East, where people would say, hey, Talal, I want to buy X amount of Bitcoin. I'm like, okay, fine. I will connect you with some company in Switzerland. And the reason why I was sending people to a company in Switzerland, because anytime I would send people to local exchanges, they would have a nightmare of an experience and come back to complain to me. I'm like, why are you complaining to me? I have nothing to do with those companies. After we sent, I think during 2019, I think we sent over $150 million worth of flow to a Swiss exchange. And my partner, Yazan, was like, listen, we can build a business around that. So we kind of already had the OTC demand, which we knew we could use to kick off the let's say, revenue cycle. And we were lucky to have worked with the Central Bank of Bahrain, who allowed us to become fully licensed. And I guess we split up the MVP into different phases. Initially, the three founders put in some of our own money. So we weren't venture backed until we had a full financial license, paying customers, the MVP working and people already using the app. So that allowed us to split it. Even when we first launched, and we're like, shit, I don't think we're ready. So we called it early early launch or test launch for 3 months until we became properly ready. Then we fully launched in, I would say, mid 2021. So we've been live for 2.5 years now.
Right. You talked about fundraising, that, you waited until you had your product ready, and even until, you got your first license, which was from Bahrain. But what was fundraising generally like? I understand that, you're saying that the competition wasn't good enough, but there were two big players that were there in the region before you, and that had raised a significant amount of money, not too much money. I mean, Oasis may have had raised tens of millions of dollars by the time you, I think, went on to start your fundraising, and Rain had raised less than $10 million, because I think their larger round came after you guys launched officially. So what was fundraising generally like? And then, after you answer this, I have another question on fundraising related to Sam Bankman, but let's just hear this one first.
Cool. Yeah, so to answer your question on how we thought about it when you said there were two other players in the region, you said that there were two big players in the region, and with all due respect, it depends on how you define big. With all due respect to the two other exchanges or the other exchanges in the Middle East, they all felt underwhelming from a product ambition standpoint. Some of those exchanges has distributed dividends, which means that they think that $1 outside the company is worth more than $1 inside the company. And that showed me that it was a weak mentality that we could easily crush. The way we see crypto evolving and the way we see the potential in the Middle East meant that we were comfortable putting our own money to start, as all startups should be, in my opinion. You should start with your own self-funding, because it teaches you how to be frugal, teaches you how to not spend insane amounts of money for things that don't have clear ROI back. But so we initially self-funded. After we launched, we were lucky to get connected with Beko Capital, who led our seed round. So Beko is the biggest VC, biggest non-founder on our cap table.
What's the size of the seed round?
Yeah, seed round was $9.5 million. Again, if you look at crypto fundraising, it's probably the most cyclical, because we were like multiple times oversubscribed for our round, which, if you ask me, is crazy, because we initially wanted to raise 5 million. And then there was so much interest, we ended up increasing our seed round to make it 9.5. But crypto was absolutely exploding at that point. Coinbase was trading at like maybe 30x its revenue multiples. In the bear market, it traded at 1.5x its revenue multiple. So it was peak crypto euphoria, peak crypto insanity, which meant that fundraising was quite easy. At the same time, if you come to a year ago when FTX had just blown up, and you wanted to raise any amount of money, it would have been nearly impossible to do so. The way we think about crypto fundraising is you need to raise when you don't need the money, because if you raise it when you need it, you're going to certainly get screwed. But again, there's no right or wrong. Like if you look at, you mentioned Rain raised like 110 million. Any company that has a cash injection of 110 million, naturally they're going to want to be aggressive and they're going to want to spend. But in my opinion, the right thing to do is to raise during peak bull run insanity, but only invest when you think it's right, not when your investors are pushing you or say, hey, you haven't deployed the money. Yes, of course, because you only should deploy it when you have clear ROI. So at CoinMENA, we tried to, or we successfully were able to raise the seed round and then convert the investment that we did there into recurring revenue that allows us now to be cash flow positive, even if you calculate it on a weekly basis. So we've switched our financials. Eventually, we want to become down to a daily level where we calculate P&L to show that it's basically a recurring business and not one-off OTC deals.
So the total amount of money that you've raised until now is the seed round only.
And we did a bridge round after that when FTX drama was happening and there was a lot of ambiguity and uncertainty in crypto. We raised another $5 million just to shore up our balance sheet. That was like a bridge round. But we had some very strong participants in that round, including Circle, which is the issuer of the USDC token. And yeah, basically, so total we've raised 14.5 million so far.
Right. And from these two rounds, I'm assuming it was your seed round in which the founder of FTX participated?
Yes.
So, how did that happen? Did you actually meet him?
Yeah, I've met him. I met him a few times. The last time I met him was 2 weeks before FTX blew up. Basically was invited to some lunch in like the private room of Zuma. I was definitely the biggest pleb, or like the least wealthy guy in that room. I was going there as an advisor to one of our clients, and Sam was looking to raise $4 billion to create his own stablecoin, similar to BUSD.
Right.
And luckily I had voiced my concern, and obviously now I remind my investor. You saw I called that one out. Even though I would say that I was duped by FTX, I did not call out FTX early on. Luckily, our risk officer and my partner knew and acknowledged the risk of FTX. But going back to how we ended up raising the money from FTX, they were actually the first
money. Did it come from FTX or Sam, the money that you raised?
It came through one of their entities. It did not come through FTX directly. Because FTX wasn't actually making direct investors. Luckily for us, it was a convertible note that we were able to address. They never actually converted into shares. But yeah, basically the way that it happened is one of the guys that was managing FTX Bahamas, I had known because he used to manage the OTC desk at Kraken and a few other big companies. And they were looking to make an investment in the Middle East. I guess that was, for me, real life example of how fundraising is very similar to dating, where you have to pretend that you don't care, and then they will eventually follow up and want to pursue you. So they told us that they want to make an investment in the Middle East. We told them sorry, not interested. Turned them down very directly, and they kept following up. And then we threw away we ended up changing the terms after because we realized that they were too predatory. But we put all the terms that we wanted, and it was like the term sheet was way too aggressive, and they accepted it. Yeah, actually, when FTX invested, they invested when we didn't even have a round, so it was basically going to be rolled up into whatever our seed round becomes.
Right.
I thought that they were aggressive businessmen at the time. Turns out they were crooks, and that's why they were this aggressive. But yeah, FTX was investing. Luckily, we did not raise too much from them. So it was a small amount that they invested and never became like a material shareholder, or never actually became a shareholder. Again, following gray hair legal advice, one of our board members actually told us for any crypto investors, you should reserve the right to be able to cancel the convertible note at your own discretion, because crypto investors aren't as mature as traditional investors. And we actually included that clause in all our crypto investors' notes, and that's how we were able to get out of this mess. But yeah, FTX was really a real life example of how social proofing works. Or it shouldn't work, but it worked for them. Like when Bill Clinton or Tony Blair or some guy that got paid, I don't know how much money, or Kevin O'Leary would go out and speak on behalf of FTX. Steph Curry, Tom Brady, Lewis Hamilton are the faces of the company. They're the sponsors of the Miami Heat Stadium. But people fell for it. People fell for it. Retail, investors. I remember Sequoia have one of the very interesting notes on how FTX is going to be the first $1 trillion company or whatever. In crypto, if there's one thing I learned is when there's too much hype, you need to tone down your excitement. And when there's absolute bear market, people think crypto is going to die, you have to be more optimistic and remember that this is part of the cycle. And that's actually how CoinMENA became a profitable business, is because I've been telling the team all throughout is you will have crazy highs and you have crazy lows. We need to make sure that we are severely understaffed so that when there's these lows, we don't have to fire everyone like our competitors had to. And then during the bull market, when there's peak insanity, we need to be able to add incremental team members. So at some point during the bull market, we had a partner where we could add compliance officers, client relations officers on the go with 1 week notice. Obviously, it's a trade-off between quality and cost, but it's way better than your team morale getting obliterated because you've had to fire half of the team.
Right. What's the size of your team right now?
We're 33 people at the moment, but looking to grow, looking to sustainably grow.
Right. And what's the trade volume that you handled in 23?
So between about 1.5 billion dirhams. About $400 million.
I'm assuming that you would obviously know what your competitors are at. So is CoinMENA right now the second largest or the third largest or the largest in terms of volume handled in 23?
Yeah. So, okay. So again, Anna, so in our estimations, we're definitely the largest. And the way we do that analysis is looking at on-chain analytics. In other global mature markets, you have a read-only API that allows you to verify the volume of all of those exchanges. Having said that, one very important difference when talking about volume is we don't have an order book, and none of the exchanges in the Middle East have a real functioning order book, meaning that the buy side and the sell side are real orders being placed by their own market makers or users. And that is, there's not enough volume and demand in the Middle East for you to manage your own order book. So these are, I guess, important qualifications to make. We don't offer any leverage or any margin. So when you compare Binance's volume, it is a completely different ballgame. So we only do on-ramp and off-ramp. So the volume that I'm telling you about is people moving between their bank and crypto to their bank. That would make CoinMENA the largest player in the region when it comes to on-ramps and off-ramps. If you look at trading volume, then obviously Binance, Crypto.com, etc., they have larger volumes. That's from the local players. We are now number one, and I would basically anyone can go in and verify the blockchain addresses of all the companies. You'll see that we do almost double what the other local exchanges do. And that's right. If you look at the on-chain volume of deposits and withdrawals.
And if we go by that claim that you are actually the largest, how were you able to do this? How were you able to get to this scale in a shorter amount of time with less resources than the other exchanges in the region?
Don't spend stupidly. If I'm completely honest, you will not find any, don't have unnecessary expenses. First of all, you have to make sure that your volumes are aligned to your costs, or your costs are aligned to your volumes, because you're in a very cyclical industry. So you need to make sure that when you have high volumes, you can spend. When you have low volumes, you're able to be super tight. Second of all is aligning incentives of all of the players. I think CoinMENA has the biggest share option program out of all the crypto startups. I don't know what, you probably know better than me how.
What's the percentage of your pool?
Allocated 18% when we started, and we're refreshing that on a round by round basis. From my understanding, 18 is on the healthier side of how much is allocated, and that's something that honestly helped us retain our team, but it's also helped us improve our offering a lot. And then, better service. we have team members that are, in my opinion, more proficient, more motivated, and have more of a chip on their shoulder than the competition. We try to avoid being complacent. But again, look, I will want to also be try to be balanced. The other exchanges that we're discussing, they did have a golden period when they started. They were growing at a very fast pace. Some of them did massive rounds. So again, at CoinMENA, we don't celebrate moving the most volume. We don't even look at the other exchanges as our benchmark. Our goal is to be the largest crypto player in the Middle East, and that means Binance as well. And for us to reach that means we need to make sure that we don't become complacent and continue being hungry and continue setting higher and higher goals.
Right.
But yeah, how did we do it? It's a cost and revenue arbitrage. Really, it's a cost and revenue arbitrage. We have a much lower cost base than our competition, and we're targeting the same market. And we avoided a lot of unnecessary expenses. Usually when you raise big on venture, or sometimes when you raise big on venture, you end up making unnecessary expenses. Some of our competitors have like the football team sign on like the sponsorship. That is something that, in my opinion, comes way down the road after you have a very sustainable, profitable business. Like, you should never sponsor a football team and mass layoffs during the same year. That shows very poor financial planning, in my opinion. But then again, we only look at ourselves from a benchmarking standpoint. And we wouldn't want to use the other local exchanges as benchmarks because their product and performances are not something we aspire to be.
You talked about FTX and how that unfolded, and you've already touched upon safety in this conversation. But as an average user, if I see what has happened with FTX, and if I'm, let's say, based in the Middle East, what guarantee do I have from CoinMENA that it would hold my money safely and won't go, for example, bankrupt a year later?
Okay, so that is a very good question, and it all comes down to, in my opinion, licensing and regulation. That is the primary method at which exchanges, custodial businesses, anyone that is asking people to send them their hard-earned money to govern. And with all due respect to Bahamas, FTX was regulated in Bahamas. If you are going to deposit your money in a stockbroker, would you rather use someone that is by DIFC or some Dubai-based regulator, or doing it in Bahamas? In my opinion, it is a very clear answer. How does licensing and regulations help? CoinMENA has to report to the Central Bank of Bahrain on a daily basis. We have to report to the VARA, the Virtual Asset Regulatory Authority, on a weekly basis, where we have to show how much we owe customers and how much we have in terms of assets. So there is a reconciliation between the client money accounts and the assets at all times. This is how regulators make sure that exchanges are backing up their assets one-to-one. And that means if I owe Zubair a Bitcoin, there is one Bitcoin sitting in storage. What FTX did is they would say, okay, I owe Zubair one Bitcoin. I have the same amount in dollar terms of some token, FTT, Solana, what have you. So they're over-leveraged, they're overexposed, and they eventually end up going bust. But then again, I have to also, for my own peace of mind, I have to stress that in the world of crypto, the saying of not your keys, not your coins, in my opinion, will become even more important as the years come out. So if you buy Bitcoin on CoinMENA or any other exchange, I do think that it's important for people to learn about self-custody. That's how you guarantee that you have your Bitcoin holdings. Yani, let me give you an example. Let's say a specific nationality gets banned from entering the Middle East completely. Gets banned from holding any bank account completely. If the regulator tells me, hey, Talal, you need to close Talal's account, what do you think I'm going to do as a regulated entity? I have to follow what the regulator says. And when a regulator says do X, we will have to do X because we're regulated by them and fall under their guidelines. Again, I think it's super important to look at which regulator is governing your license. In my opinion, Bahrain, Central Bank of Bahrain, VARA in Dubai are considered world-class regulators, and they've had the track record to do so. Yani, Binance, Rain, and CoinMENA all are regulated under Central Bank of Bahrain. with no issues to have arisen since they launched their crypto regulations. VARA, on the other side, is the first virtual asset regulator on a global level. They only regulate crypto. We're very proud to be part of that licensing regime. And but again, you said something about guarantees. In life, in my opinion, there is nothing that is guaranteed. That is something that you can mitigate risks as much as you can. But to say that something is absolutely guaranteed, like I remember when people used to say that the US Treasury bills are guaranteed to be no risk. BS. Clearly we see that they are risky. People had not taken into consideration the time risk, which means that they could trade below par for a specific period of time. And that is US government Treasury bills, which some people in finance used to call the risk-free rate. There's nothing called risk-free rate. It's everything in life has risk. But in my opinion, the biggest risk is not owning Bitcoin. Again, you look at it in relative terms.
That's a very interesting argument. Before starting the podcast, when we were speaking, you told me that you guys are a remote first company. You don't have any offices. Why did you make that decision when you were starting CoinMENA, and how has it played out so far? And what are some of the things that you don't like about the company being remote? I mean, I'm sure you have a lot of reasons to like it. That's why you're keeping it that way. But is there anything in particular that you don't like about, CoinMENA being a remote first company?
Yeah, so similar to everything in life, there is a trade-off, right, between advantages and disadvantages. Every decision you take is going to have winners and losers. First of all, I'd like to clarify that CoinMENA, as a regulated entity, we are required to have a physical office that has our compliance officer, etc. And we do meet all of those requirements in Bahrain and in Dubai, where we are regulated. Having said that, our development team, management, client relations, etc., the team is remote because I personally believe that the frustration and the hassle of commuting to and from work is something that we don't need to do in 2023 or 2024. Some of the things that I guess are easier to do in office is culture. But then again, now we have a digital culture, similar to how people have digital personas. Like if I showed you a Twitter account, would you be able to deduce the personality? Of course, it's a digital way of doing it, but my Twitter persona is very different from yours, and it has a personality that is purely digital. So I think it's very difficult to go from office to remote. But if you start off as remote and you build systems that allow you to operate remotely, then the advantages far outweigh the disadvantages. And that can be reflected in pay. You're able to pay your team slightly more because you're not renting. You're able to have flexibility in terms of being action or output oriented, and people that just show up at 8 a.m. and leave at 8 p.m. to show that they have a presence, that doesn't count anymore. Some of the things that I do miss are like water cooler type conversations where you randomly chat with your team member about something, but we have an amazing colleague leading HR, Mariam, who's figured out several ways where we don't lose that touch from being fully remote. And we try to meet up as much as possible. During COVID, I guess it was harder to do so. But now with travel coming back and life being semi-normal, it's much easier to meet with our team, and we make an active effort to do that. But we always ask our team whether they prefer office and remote. And I think because we had a remote first, let's say, direction, we ended up hiring people that fit that more so than people that don't.
You have, pretty ambitious goals of becoming the largest crypto player in the Middle East and serving tens of millions of people over the next few years. I'd like to understand what's the size of your user base at the moment, and how do you plan to grow this? Because, you claim that you are very disciplined about how you spend your money. You're profitable. So you're keeping at least a big part of the money that you had raised still in your bank account. You haven't used that. But how do you plan to expand your user base to tens of millions of people in the Middle East over the next few years? Are you thinking paid acquisition channels? Is it going to be all organic? I'd like you to share some specifics on, how do you plan to do it?
Yeah, so the way that I think about it is, again, maybe a bit too VC-like, but I think it's the right way to think about it, is how much does it cost me to bring a customer and how much money can I make from that customer in a year? So the average revenue per user. At the moment, our average revenue per user is 7x our customer acquisition cost. So we have a funnel where you put in money, you get out customers. So that funnel is ongoing, and if we need to raise again, then we'll do it. But that won't be to offset a P&L concern. It will be to double down on those pipes that we've created, where you put in money, you get out customers. It costs you X to acquire that customer. You make 7X from that customer on an annual basis, and those are very healthy metrics that allow you to scale. One thing that also is important to think about is if we look only at number of users, it will not give me an accurate representation of the financial health of the company. Because someone in Qatar trades, I think, $26,000 per average trade. Someone in Egypt trades $3 per trade. So the difference is absolutely insane.
These are real numbers, or
these are actual numbers. The difference, this is average trade size. It is sometimes some investors like, how, that's insane. But anyway, I took extreme examples of Egypt and Qatar just to show the contrast and make a point. But yeah, so the way we think of growth is always we don't want losing business. We want profitable business. And realistically speaking, the way that we will reach hundreds of millions of people is by targeting countries with lower customer acquisition costs. So we still imagine that we will have more users from Egypt than we will from Qatar, even though the ones from Qatar might make us more money. I do think that mass retail is still the biggest opportunity, and that's why we will continue focusing on it. But yes, it's all nearly impossible to reach 100 million people if you just do it organically. We will not invest too heavily in traditional paid marketing, but we will more, at least the previous run, we followed a very lucrative referral program, similar to the PayPal or Netflix model for growth. If if I'm paying you to bring me a customer and I know how much each of you are going to make me back, then you just have to fine tune those, and you can scale that quite nicely. To reach 100 million users, realistically, we will need to raise some additional money, but as a cash flow positive, profitable business, we will do it at our own terms and we won't have to rush into it.
How do you rate 2023 as a year for crypto? What are your thoughts on it?
I'm always bullish, so definitely not the right person to ask. But we started the year at 16K. We ended the year at 42K. Bitcoin performed better than NASDAQ, better than the S&P, better than any major asset. And I'm confident that is just a drop in the bucket in terms of Bitcoin's potential. I also think that as an industry, it had removed some of the negative stigma that is associated with FTX and all of the different scams. The ETF approval, in my opinion, is going to be a huge shift in sentiment. Maybe these will be one of the final months where we have this cowboyishness for crypto, or the wild, wild west kind of thing. Because when BlackRock, Vanguard, and other big players come to the market, I do think that we'll see a lot more institutional-like offerings. And at CoinMENA, we've ensured that we do that. Yeah. So at CoinMENA, we've designed our offering to be suitable for the inflow of institutions and regulated players that hopefully, biasedly thinking, will come to the market in 2024. But yeah, 2023 was a great year for crypto. It certainly performed well despite high interest rates, which if you ask a traditional banker in the beginning of the year, what's going to happen to crypto? They're going to tell you, interest rates are at all-time high for the highest time in the past 40 years. A non-yield generating asset such as Bitcoin is going to suffer. Yet it rose by over 150%, and goes to show you that traditional finance still don't understand this highly uncorrelated asset, which is Bitcoin.
How much of your personal wealth or savings are in Bitcoin or other crypto?
This is not investment advice. I've been actually vocal about this. I don't own anything else. I maybe have 10,000 dirhams for my traditional expenses.
Wow. Okay.
But my wife signed up to that prior prior to that. Yeah, no, it's advisable to keep money, I guess, for rainy day expenses. And I've been trying to do more of that, but I just cannot imagine myself 10 years time saying, how did I not buy enough Bitcoin when I knew that this would become the one of the most important financial assets in the world. It definitely putting all your money in Bitcoin is not advisable, and I'm not telling anyone to do that. But I do think that having a few percent of your wealth in Bitcoin is or not having it is a massive risk at this stage.
What's the cheapest you have purchased Bitcoin at?
Actually, I did not buy it when I was gifted it, but that was like a long time ago, and I lost it. And but yeah, it was below $100. Actually, the day that I came to get interested in Bitcoin again, my brother was in university in 2014, and a guy called Bruce Fenton asked. He was visiting professor. He was a visiting professor to Bentley University, and he asked everyone in class to basically set up a crypto wallet, a wallet called blockchain.com, and he actually distributed Bitcoin to everyone in that class. And that was in 2014, where Bitcoin's up over 13,000% since then. So my brother called me up, was like, remember that crazy thing you told me about? I'm like, yes, I do. Like, yeah, well, now I have some, and I think we should look into it. I ended up, since that day, I've been spending most of my time reading and learning more about crypto. And I would say that I'm still in very early stage of learning, and no one's really an expert. Like no one fully gets it yet.
If you had the option to invest $1 million into anything today, how would you break that down? How would you invest that money? I understand that you are still going to invest most of it in Bitcoin, but and this is obviously not investment advice, but if you were to break it down into multiple cryptos, how would you do that? What part of it would you invest in Bitcoin, and how much would you invest in the rest?
Yeah. So that's a question that you know how when you sign up on investment platforms, they tell you what's your risk appetite, what's your hold period, etc. This applies very much here. So I guess I will give you an answer of what I would do now, Talal, in my current state. Honestly, with the Bitcoin ETF coming about, I do think that Bitcoin provides the best risk to return. Because if we think of best return on the risk that you would be taking on, so I would put at least 2/3 of it in Bitcoin at this stage. And the reason why I would say that is Bitcoin is more anti-fragile than any of the other assets. If things don't go very well for the world, almost every crypto asset can be shut down except for Bitcoin. If governments actively try to shut down Bitcoin, in my opinion, they wouldn't be able to do it. Because multiple governments have tried to do that and have failed. So I would go with Bitcoin as 2/3 of the portfolio. Again, if you want to be, I guess in crypto called degen, or like a degenerate in terms of how you invest your money, you can go for some low cap tokens, but that is very similar to making like venture bets, or maybe even closer to gambling, if I'm being super honest. It depends on your risk profile. I personally like GMX, which is derivatives exchange. I'm big on on-chain protocols that purely live on-chain. I'm always cautious of making those crypto I guess estimations or predictions on how to distribute your portfolio.
But you're making it easy. You will invest like 2/3 in Bitcoin and the rest across different things. I think that is very straightforward.
So I would allocate. Even that remaining third, I wouldn't have too much unless I have very high conviction in a specific asset. I would actually distribute. I would distribute it between low and mid caps. Like I wouldn't go for only the top 100 tokens, because in my opinion, some of those runs have already occurred. So like Solana is a blockchain that has been becoming increasingly popular the past year, but it's already rallied from like $6 to $100. Do I think that the risk return now makes sense? No. So I wouldn't invest in it.
Just concluding the session, I have two final questions. Apart from regulations and compliance, what have been some of the biggest challenges for you as somebody who's leading a crypto exchange in the Middle East and North Africa or building it?
Convincing the team that the world is not over when Bitcoin goes from 66K to 18K.
Right.
So like managing your team's motivation, managing even like funnily enough parents. My parents, when Bitcoin dropped from 66 to 18, they're like, oh, Talal, what's gonna happen? Like my grandma got worried, managing people's emotions and managing people's expectations and how hard they want to work when the markets are not really going your way. If Bitcoin is going up from 16K to 42K, there's a positive sentiment associated with that if you're working in crypto. So managing the team as motivation when markets are down is a very important one. I would say education is also a very, very big one because many people still don't understand how to safely transact, how to safely allocate their investments. We've had a client once try to withdraw their Bitcoin to like a physical address, apartment 2A, and like the product team was shocked. This customer keeps trying to withdraw and the withdrawal gets rejected because we have some like parameters and checks to allow you to withdraw or not to protect the user. Like, let's say you're withdrawing Bitcoin to an Ethereum address. We do not process this transaction because it would be forever lost. So we went back through our files and we found someone was trying to withdraw to like apartment 2B somewhere in Riyadh. And I'm like, okay, crap. Not ideal. Customer education is also a very big one.
To be honest, I'm not very surprised. I mean, this is obviously a very innocent mistake. Anyone could make it when reading address and confusing it with the physical address. But I'm trying to think, what did this person actually assume? Or like, what would they get delivered as in an envelope or something?
So I asked to speak to the customer. He was expecting like a hard drive, like a
right. Got it. Okay. Yeah, that makes
device
sense.
that holds the keys.
Yeah, that makes sense because you can actually, own your Bitcoins in a physical device if you like can do that. So he was not wrong about actually imagining that this is going to happen.
But Wallah, there's a lot more. So Jack, the founder of Twitter, Jack Dorsey, just created a very interesting Bitcoin storage device. I still haven't ordered it or still haven't received it. Sorry, I ordered it. But I've been playing around with different types of physical devices. This one's actually quite interesting. It looks like a physical card, like something you put in your wallet. And then you have backups of it. There's interesting new ways. And I do think that those will become more popular as we grow. And again, there's an argument that if you have $100 worth of gold, you might put it under your mattress. But if you own $6 billion worth of gold, you're going to put it at some regulated custodian with insurance and whatnot. So I would say that doubt crypto at your own risk. If you want to be skeptical about Bitcoin, sure, it's your right, but give it another shot. Like people who have spent 20 minutes reading about the importance of self-sovereign money that cannot be debased, eventually go out and buy some Bitcoin. And final statistic from my side, you need to buy less than 0.3 of Bitcoin to be considered as part of the top 1% globally. Why? Because there's only 21 million Bitcoin and there's at least 8 billion people. So if you divide those, owning 0.28 Bitcoin would make you part of the top 1 percentile globally. My pitch to
that's
investors
is $17,000 today. I mean, considering the rate, it's trading at
$15,000, almost $15,000. Actually, less than $15,000 because $15,000 would get you a third of a Bitcoin. Today we're trading at 45K. So
Right. One final question, Talal. Thank you so much for sharing all these wonderful insights on the world of crypto. But one final question for aspiring founders and builders in the Middle East. You are somebody who has failed a few products and companies before. You've led CoinMENA to where it is today, a scale of 1.5 billion dirhams of trading volume, even though that's not what you like to be evaluated on as a metric. But still, I mean, it's huge volume. So what would be your one piece of advice for somebody starting a company in the Middle East today, starting a tech startup? If you could just give them one piece of advice, what would it be?
Start. Start. No, honestly, like all the planning, all the sheets, that most of it, like it's important to plan, but it's even more important not to over plan. In my opinion, most of the things you figure out while you're doing it. Start, and don't put too much pressure on the start. Yani, soft launches, in my opinion, are absolutely the best way to go about it. Create a simple MVP and test it out with, it depends on your product. Like if you're building a SaaS product, very different from building a crypto exchange, but test with a small number of customers. Have those customers as your specific personas. We had a Saudi friend of mine, we had my grandfather, we had very different people testing out our product to begin with. We took back their feedback. Some of it we implemented, some of it we said not useful. But yeah, the advice would be start and find a good partner to do it with. Some people are more they prefer the solo founder kind of thing, but honestly, it's more fun when you have someone to do it with. And I was lucky to have great partners in Dina and Yazan. It helps you enjoy the wins more, and it reduces the stress of losses and headache if you have the right partners on board. So yeah, two pieces of advice for your question of one. Start and figure out the right partners to do it with.
These are some wonderful final thoughts. I completely agree with the part. A lot of us just spend too much time on planning and analyzing, and that does not really translate into action. So it is super important to take that into consideration and go and test things out and just put them out there. Thank you so much, Talal. It was wonderful to have you. I learned so much. I still have like tens of questions. I had a lot of follow-ups, but I did not want to spend too much time going into too many details. Maybe we can leave that for another day, but it was eye-opening for me as somebody who likes to learn more about crypto, and I'm sure the audience would also enjoy this session. Thank you so much, Talal. It was great to have you here.
Likewise, it was a pleasure. Thank you so much for this chance.